In today's video, I'm going to walk you through the details of an absolutely incredible deal that you could replicate yourself. It's actually on the market right now. And this deal is going to provide infinite cash-on-cash returns because we're not going to have any of our own capital tied up in this deal. It's turnkey. It's actually already furnished, so it's going to start cash flowing from day one. It's going to produce $3,100 of net cash flow every single month. That's after all expenses, all the cleaners, set aside for maintenance, utilities, absolutely everything. There's going to be $3,100 per month left over of net cash flow. It's also going to provide us with an $80,000 tax write-off in year one, and it's super affordable. It only costs $300,000. And again, that's none of our money out of our own pocket. That's 100% finance, and I'm going to walk you through how that works as well. For those of you that don't know me, I'm Kirby Atwell, and I started investing in real estate when I left the Army 15 years ago. And after my wife Taryn and I got to financial freedom ourselves, we've now helped hundreds of other people buy the highest performing, highest cash flowing short-term rentals that exist. And a lot of these properties aren't the ones that you would expect. So in this video, I'm going to walk you through a deal that I just analyzed with Jesse yesterday. He's a member of our program. He brought this deal that perfectly aligns with the principles that we teach. And it's a phenomenal deal. Like I said, it's going to provide huge tax savings, significant cash flow. And if this is the type of deal that you're also interested in investing in, you can book a call with me or my teammate at the link in the description below. You can just click on that link, answer a couple questions, and it takes you right to our calendar. People tell me all the time, I don't know how to rehab properties, so I couldn't do this. Or I don't live next to an area where I can buy a property where this would work. And most people I work with buy remotely. They do this remotely and they don't know anything about renovation. That's the beauty of this strategy, is that it still works whether you're down the street from the property or you're all the way across the country. And the property that I'm going to show you today is a perfect example of a totally turnkey property. Like I said, it's actually already comes furnished and it's going to cash flow incredibly well from day one. So let's jump right into it. There are three big aspects that lead to a super high-performing short-term rental. And when you find a deal that has all three of these, you most likely found an awesome investment. And I'm going to show you how this property that we're going to go through today has all three of these in spades. So here are the three things. Number one is just outside the most popular, i.e. expensive, markets and cities, but still close enough to population and draws that the nightly rate and occupancy stay relatively high compared to a much lower cost than if you had purchased in that mainstream area directly. Number two is multiple units of income coming in on one property. And this can look pretty expected, like a typical duplex or a triplex where you have multiple units. Or it can look pretty unique. And sometimes you're actually rewarded higher for purchasing something that is unique. So the one that we're going to go over today actually is a super unique property with a cabin and a train car that's a separate unit on the same property, but both are big income generators. And when you have elevated short-term rental income coming from multiple units on one really affordable property, you have a lot of net cash flow at the end of the month. And number three, something that I'm a huge advocate for, and if you follow this strategy, this will work really well, is that the property still cash flows as a long-term rental in a worst case scenario. I cannot tell you how many people I come across that own these high-end vacation rentals. And their expectation is just that everything will always be the way it is now. And we've already seen that some people are in a really bad position because they bought properties as prices were really going up. And then all of a sudden, the rug kind of got pulled out from under them in some of these mainstream areas. And now prices have actually dropped as interest rates rose and the competition has crept up. And so nightly rates and occupancy have dropped at the same time. So now they're sitting on a property that they're underwater on and they're actually not cash flowing on a monthly basis. They just expected that they were going to make all this appreciation. On top of this, in a worst case scenario, so let's say there's a huge financial crisis or there's a regulation shift or there's another COVID lockdown or whatever, there's going to be another crisis at some point. We all know that. What do you do in that situation? You can't rent it as a long-term rental. So even if you can sustain as a short-term rental, in a worst case scenario, you can't rent it as a long-term rental without losing thousands of dollars. And if you have a whole portfolio of these properties and each one is losing thousands of dollars on a monthly basis, you're in a lot of trouble. And if you're trying to sell it when everyone else needs to sell at the same time because they're all going through this pain, that's a bad scenario as well. So I highly, highly recommend buying properties that work extremely well as short-term rentals and make a ton of cash flow. But in a worst case scenario, you're protected no matter what, because you could just rent them out as long-term rentals and they still cash flow. All right, so let's jump right into it. I'm going to show you how this specific property models all three of these principles. All right, so here's the property. It's in Lake Luzerne, New York. And if you remember, the first principle that I talked about was buying just outside of the more mainstream areas. So this is in upstate New York, just north of Albany, Adirondack Mountains. And I think when most people think about this area, a lot of times people think of Lake George. It's a really popular, really large lake, really expensive properties around there. And so if you can get some of the benefits or some of the draws of this area, but be just outside of the more mainstream area of Lake George, but yet still close by and still have a lot of the benefits, it's still an area that people come to, then you kind of get the best of both worlds. So if we look at Lake George median home price, you can see it's $700,000. That's a pretty big, cost for a second home or for a vacation home. But if you look at Lake Luzerne, which is not too far away, the median cost is $257,000 to $315,000. So less than half the cost, but yet you still get the elevated nightly rate and occupancy because you still have some of the same draws for this area. So when we look at this property specifically, this is the property itself. So somebody built this beautiful cabin on the property, and then they got an old train car and retrofitted the train car as a secondary unit. So this is the cabin. This was built, I think, just a few years ago, actually. So it's fairly new, all furnished, really nice. It's a 2-bedroom, 1-bath cabin, nice porch area, 3-season room. And then when you go into this is the train car. So you can see the train car here, kind of train themed around it. They built a porch outside of the train car to give a little bit more space as well. And then, you get the feel of the train car, but yet it's renovated really nicely, and it's furnished really nicely. And this is a 1-bedroom, 1-bath property. So you got a 2-bedroom, 1-bath and a 1-bedroom, 1-bath on this same lot. And if we look at the street view of where this is, it's actually on the other side here. You can see how there's parking on each side for the two separate units, and the property's perfectly set up from day one to start hosting guests at this vacation rental. So let me just walk you through the data here to show you what you can expect on a property like this. So the purchase price that they're asking is $300,000 for both units on this property. So when we go to AirDNA, so the first thing I recommend is always to look at, the street view, look at the listing, really get familiar with the property, then go over to AirDNA just to see what the averages are for the area. So with AirDNA, you can type in any sub-market and see what the average nightly rate is, what the average occupancy is, how many short-term rentals there are. So this is part of the Lake George sub-market. So it kind of combines Lake George and Lake Luzerne. So you're going to have some elevated numbers here because there's some really high-end properties that kind of drive up these numbers a little bit. But what I find with a lot of areas that are on the water is that the occupancy rate actually, the average is lower than, it's brought down because there's properties that are just listed in the summertime, like right on the water. And then the average daily rate is actually elevated a little bit compared to the entire area because there's some outliers that pull that average up because, again, they're like multi-million-dollar properties right on the water. But it still is an indicator. It kind of shows you what the demand is. And I always like to look at the occupancy curve here, and it shows you over the last several years what that's looked like. And for this market, it's been very consistent. And so you can see, obviously, in the winter months, it's a bit slower. Now, there's some ski areas up here, so you're still going to get some activity in the winter time. And then in the fall time, people go up there to see the leaves changing and stuff like that. But the real peak months are definitely going to be the summer. So it's like 4 months of really like peak summer months, and then it tapers off. So I would count the high season as about 3-4 months, and then the low season as the rest of the year. So then what I always recommend is going over to Airbnb itself. And I don't take AirDNA. AirDNA, if you put in an address, it'll give you like an analysis. I've seen that be way off. So what I'd rather do is just go over to Airbnb itself, look at the actual comparable short-term rentals around it and see how they're performing. See how many bookings they have. Look at their calendar, look at their reviews, all of that. So that's what I did. I put in the address and it pops up right here. And now I'm looking for 2-bedroom and 1-bedroom properties that aren't right on the water, that are very similar, type of properties. So here's a perfect one that is similar style inside. It's a 2-bedroom, 1-bath. only has 3 reviews. Generally, I'm looking for, more reviews than that, but it's a newer property. And so you can look to see, are they actually getting bookings, and I think they've done a good job with this one. So when you look at their summer pricing here, you can see $246 in August. You can put in any dates and you can see how much they're charging per night. So $375 per night. And now Airbnb includes the cleaning fee and their service fee in this. So you have to subtract that out in your head, over a 2-night period. It's a $100 service fee. That's $50 per night. So, that the nightly rate minus the Airbnb fees might be $300 instead of $375 here. So in your head, you kind of have to do that math a little bit. Know that there's always still a cleaning fee involved, but it just shows you the one nightly rate that's combined of all of them. So $246 here in June. Then I look at another one. So I never want to look at one property and take that as gospel. You're looking at all the data in the area and lots of 2-bedroom properties to really understand what that looks like. So this one has 152 reviews. So a lot of demand for this type of property. Great reviews, very similar type of property, 2-bedroom, 1-bath, small, cabin type property. And so when we look at their calendar, you can see, again, quite a few bookings coming up here. It's the first week of June. So there's some upcoming bookings. And when you put in different dates, they're at $400 a night in July. So a little bit less bookings, but at a little bit higher price point. So you can start to get a feel for what that range is. There's never going to be an exact nightly rate and occupancy, but you can start to get a feel for, at this price point, $426, they've got a week booked up here. They've got, it looks like 2 nights booked up here. So, they're getting some bookings at that price, but just not as many as the lower price that we saw on the last one. Here's another 2-bedroom, 1-bath, not as great of reviews, but lots of bookings, not the best marketing or furnishings or anything like that. And so you can see it on this one, they have a lot of bookings and they're at $365. So a little bit cheaper price point. They're also doing a special offer of $44 off, $230 in June. So, over the next week or so, they've got their prices marked down a little bit. $365 in July, and then $365 in August. So you're trying to get a feel for what different size properties are. Here's a 1-bedroom, and so you can kind of get a feel for the difference between a 1-bedroom and a 2-bedroom. So they're at $132. Oh, that's in October. So over the summertime, what are we looking at here? $172 for weekdays. Let's see, in August, $258. So you start to get a feel for 2-bedrooms and 1-bedrooms in the peak season. You can look in the off season, then you can read through all the reviews as well and get a ton of information from previous guests on why they stayed, what they like about the place, what they don't like, what not to do. And so from that, then you can come over to the analyzer tool and just plug in your numbers. And if you want to copy this analyzer tool, just comment analyzer in the comments below and I'll shoot you over a copy of this. And so you can fill it in and have a template. But if the member of my program, Jesse, is going to purchase this property at the list price at $300,000. We'll run the numbers as if that's the case. So again, the 3 principles that I talked about, this property is just outside of the more mainstream area. It has multiple streams of income. It's got the 2 different units, and then it also will work as a long-term rental. And I'll walk you through what those numbers look like. So we're plugging in the purchase price of $300,000, closing cost approximately $5,000. After repair value, we're just going to keep it at $300,000 because it's already turnkey. You can see what the taxes and insurance are. Now, he's got no repair costs because they're selling it literally like turnkey, like even the outdoor furniture is all set up, like everything's ready to go. So if I was purchasing this, I would actually even list it before I owned it. I would take the listing pictures from the listing, put it on Airbnb, and start getting bookings before the day I even closed on it so that I close on it and I start booking it out the next day. Like that's ideally how you want to set this one up. I mean, it's set up perfectly to do that. Also no furnishing costs, so a lot of less cash out of pocket. Any DSCR lender is going to give you 75 to 80% of the purchase price on this property. Some are capped at 75, some go up to 80. But if it's 80%, this is actually a pretty high estimate on what the rate is right now. It's actually closer to 7% or even 6.75. So we'll change that to 7%. I think he was just really erring on the high side. So that means it's a $60,000 down payment with a DSCR loan. So that's a loan anyone can get. It's just based on the performance of the property. You can get a loan for 80%. So then you got to come up with that $60,000. So where does that come from? Because I mentioned that there's none of our own money in this property, and Jesse's not going to have any of his own money in it. So then he goes to a private lender and says, hey, look at this property. Look at the type of income it's going to bring in. Would you like to make 10% on your money? And he found someone that wants to make 10% and have a second mortgage on this property, and they're going to make a great income. Every month he's going to pay him $500, which is 10% interest on their $60,000. And then one day when he sells or refinances, he'll just pay him back. And that's a great income, great return on investment for a lot of people in a very secured position on a real estate deal. Then we go over to the next tab, which is the income and expenses. So based off of the properties that are existing right now, that have bookings, that have, reviews coming in, what is the nightly rate that we can expect in both the high season and low season? You can put on here how long you anticipate the high season to be. So again, like we said, it's like 4 months of high season, and the rest of the year, the 245 days here, are low season. So over those 4 months, we're anticipating about an 85% occupancy because there's just so much demand up there during that time frame. We can expect most nights to be booked up, and the 2-bedroom will bring in on average about 300 a night, and the 1-bedroom about 200. And so these are very conservative estimates. We saw some that were booked at 400 plus a night, but you want to be conservative and just put down sort of the lower end of the spectrum. Then in the low season, the other 8 months of the year, we can anticipate an average of 150 on the 2-bedroom and 125 on the 1-bedroom. And we're only going to anticipate about a 50% occupancy during that time. Now, January is probably going to be lower than this, 50%. But you're capturing some of the fall and spring season too, where there's going to be still some pretty big drivers for people to be up there, and the occupancy will be higher than 50%. So overall, that's only a 62% average occupancy and $388 average nightly rate between the two units, but that equates to $84,000 of income. Then you add in cleaning fees, and that's another approximately $10,000. So he's going to generate just over $94,000 or $7,800 a month going forward of gross income. So then you factor in your expenses on this deal. So if you've got $7,800 coming in, your mortgage on the DSCR loan that we talked about is only $1,597 because it's such an affordable property. So it's a really low monthly payment. And then the secondary loan is only another $500. So between the two, you're paying about $2,100 a month. You have $0 into it. You have no down payment. That's 100% financing for only $2,100 per month. And then you got your insurance and property taxes on top of that. So if in a worst case scenario, he ever had to transition this from a short-term rental to a long-term rental, he could cover his costs here by, renting it as a long-term rental. So he's not going to lose this property, but as a short-term rental, it generates significant income. So then you have to factor in the other expenses of owning a short-term rental, like utilities and Wi-Fi. You've got to have lawn and snow removal. So we're estimating on a monthly basis. Some months you might not have any of that. Other months might be a bit higher. Consumables, about $300 for toilet paper, paper towels, cleaning supplies, if you want to leave a gift for your guests, and that type of thing. And then your maintenance. You always want to set aside for maintenance and CapEx. Even though you're not going to use it every month, you want to have a healthy set aside for that. So all of that is $4,500. So you're bringing in almost $7,900 a month, and you got $4,500 of expenses total with everything. And if that's the case, that means you're left with almost $40,000 a year of profit, of cash flow on this $300,000 property. That's $3,279 a month coming in on this property. So we have a couple of different calculations here. The ROI from cash flow. This is not including any financing. So if he was just to go out and buy this property cash, he'd make almost a 13% return with zero leverage on the property. But because he has zero of his own cash in the deal, when you look at the cash on cash return, which is the return from cash flow on the cash that you have invested, it's off the charts because he doesn't have any, he had a little bit in closing costs, but that's basically it. So it's really pretty incredible type of return. You just don't see this type of return across any other short-term rental or any other real estate deals that exist out there. If you can find a $300,000 property that produces this type of cash flow with zero money out of pocket and this type of cash on cash return, it's extremely, extremely rare. But yet, if you follow these principles that we lay out in this program, this is what we invest in. We have 43 short-term rentals that follow this exact same strategy, then this is pretty common. This is the type of returns that we see every single week that our members are finding. So I'm super pumped for Jesse to go from never having done a real estate deal in his life to getting a deal that's going to have this type of returns. And you can see how over time, if you replicate deals like this, it doesn't take a whole lot of these to get to a place of financial freedom, of replacing your full-time income and being able to live off that the rest of your life. You're essentially retired. This one's $32.79 of net cash flow. So if you multiply that by 4, for most people, that's over $12,000 a month. That's enough to survive off of. And that doesn't just run out, once you get to a certain point. Like, that's into perpetuity. And that's just from cash flow. This doesn't even count the huge tax benefits that we talked about. It doesn't count the appreciation of the property that, property that performs as well. It's going to appreciate well. And there's going to be a lot of other interest from other investors that want to purchase this property over time. The principal is going to get paid off by your guests. So we're counting, the mortgage payment as an expense, but part of that is principal pay down. So every month, your principal of your mortgage is lowering, so your equity position is increasing. So there's just so many benefits that come in addition to this incredible cash flow that you can generate with this type of deal. Again, if you're interested in a property similar to this one and you want to talk through your goals and just see if the program's a good fit for you, you can go to the link in the description below. You can just click on it, fill out a form with a couple questions, and it'll take you right to our calendar. So listen, I know that you have a lot of options when it comes to videos on YouTube here, and there's a lot of experts talking about short-term rentals out there. So I appreciate you spending the time with me and getting all the way to the end of this video. God bless, and I'll see you in the next video.